Sunday, August 16th at 11 p.m. Make a wish. Nasdaq and all the other sectors essentially finished down or flat on Friday, except for the Russell 2000. Let's get into what happened here. So I want to make it very clear here, guys. If you haven't subscribed to the channel, please like, share, subscribe, and please try to watch more than just 5 minutes. I do see all the stats that people watch on the channel, and I guess I'm always surprised to like what's stopping somebody from just watching more than 5 minutes. If you didn't know that the Nasdaq broke out here, and I'm showing you a video here real quick that we called out here before the move happened about 4 days ago, right? We had a clear bull flag, and what happened from that bull flag here? What happened? We clearly broke out. You just gotta step it up, guys. It's not just that video, guys. It's these videos here. Clear inverse head and shoulders, and the Nasdaq was here at 696 here. We called it that massive move here, all the way down to right when we had a bar coding when the QQQ had the dark cover, cloud cover. I'm trying to give you guys a glimpse and how kind of institutions and Wall Street thinks, and obviously none of this is financial advice, but we're doing quite well here in the channel, and I would just encourage you again, just try to step it up a bit more. Try to watch more than 5 videos. I really am trying to show you the levels and things you should be paying attention to that I think quite candidly get looked over a lot. So right here on the daily on the Nasdaq, we still have the 55 EMA institutional support. Let me go and just mark it on the chart here real quick and find that. And there's no signs here that we're slowing down here. So if there's anybody saying, and I get it, you keep watching the TikToks and the world's gonna crash, and the clickbait titles here on YouTube, candidly I use them as well just to get some engagement. You need to start really evaluating, who do you want to listen to? Is it the person, right, who's getting things wrong every day, calling for a crash, where the market's telling you literally, not just here on the Nasdaq, if you look at the financials, there's absolutely nothing here, guys, on any sector that's telling you, right, that we're rolling over. Every single sector is lifting off here, right? So you can't play what you think. You have to play right what the market gives you. And what is it telling you here? We have Nebius here, $9 bear and backlog. It goes all the way down to, if we're not able to watch 5 minutes of a video, we just want the 15-minute TikTok shorts. It's the same people, right, that aren't able to understand why, Nebius is going up here, why Workday is going up here, right? We have a watch list bot here in the channel here, and quite candidly, again, it's doing quite well here, right? These were already marked out here before time, right? Entry 186. Well, where is it at here? So no different. I think sometimes how people won't watch videos are having a hard time understanding why stocks are moving the way they're moving, and that's where I try to come into play to showing you why it's moving, how to identify bull flags here, which I do upload to YouTube before the move happens here. Okay. So here, on the Nasdaq, we have a 55 EMA institutional support here. Your call walls for next week are 739, 748. And I think one thing that people keep forgetting here is that you are only, guys, about 2.27% away from the all-time highs, right? We flushed out down here. We had an inverse head and shoulders, right? Left, head, right? You had your bull flag, you broke out here, and now you're ripping. There's absolutely no signs here that we're slowing down here. In fact, things are, based on the PPI and CPI, are showing us that what? We might have a chance for rate cuts here, right? I don't have a magic 8 ball here, so I don't know what's going to happen. But I think the point is, right, a lot of other people don't understand, are not understanding these charts here in front of us. Another thing, another chart, one of my favorite charts that I've been showing you guys here recently is the NDFI, right? The NDFI. And what is NDFI? We're going to go over it one more time here, right? I'm going to try to keep these things up here. No different, ironically, how the Nasdaq has a bull flag, right? So does the NDFI. And again, what is the NDFI? It's basically the index that shows you, right, right? The Nasdaq 100 has 100 stocks. NDFI counts how many are trading above their 50 moving day price. That's in a nutshell, right? So typically these tend to mark tops and bottoms. Again, not a magic 8 ball here. You can just see right when you lift off here. You can see when you got washed out here, and then what's been happening here. You held support over that 50% line here, okay? And now you're taking off here, right? So does this look like if, right, this, right, is the showing you how many stocks here above their 50-day moving average? Does it look like it's turning up or turning down? Well, if you just zoom in here on the chart, you can see what's happening here. It's just lifting off here. So something's showing us here objectively, right? We're not just going through all these random charts, right? Something is showing us here objectively, right? That these stocks are lifting up above their 50-day moving average, which is very bullish, right? So what does net buying look like? I'll show you, through the charts here on the Nasdaq, what net buying looks like. Net buying looks like this, and net selling looks like this. So here's net buying, right? This is net buying, and ironically, again, what I try to show you guys is that it's above your 55 daily, which I view it as the institutional, right, level. And then, right, you have net selling, which is when you break it. There's other indicators, there's other EMAs, there's other things you can use here, right? But I really try to simplify it for you guys here. I don't think we have to big brain things. I don't think we have to really think that far outside the box, but we have to start somewhere, right? There's a lot of indicators that people like to use, and I tell people if you can't understand the candlestick chart patterns, which is just a technical portion, and you guys should know by now, right? I don't just trade technicals, right? I trade macro, which is the what and the why. Okay, like what's happening from a macro perspective relative to the world, geopolitics, right? All the way down to like what's happening macro, right, for these stocks themselves, right? Are we talking oil? Are we talking energy? The fundamental, the use case, okay? And then, right, the technicals is just the chart, which is what I go over a lot in the videos because I know a lot of people really like those things, right? So here, going back to the NASDAQ, we have our point of control, 730, right? We have our call walls for next week, 741. We have a value area high. Think about this as a squeeze zone. A lot of people try shorting at all-time highs here, and that typically never works out here. You can just kind of visually see with the chart. Every time, right, you get to a new all-time high, what usually happens here? We're gonna short. It's got to pull back. It doesn't have to do anything. It doesn't. You can't just tell the chart what to do. That's not how stocks work. And sometimes people on the video might be like, "Oh, of course," but I'm like, then why are people doing that, right? Just because it goes up here 10% doesn't mean it has to pull back 2% at all. And I think that's what you're seeing here with the other indexes here, right? Again, clear bull flag breakouts. You know, you can name the chart patterns whatever you want. One thing I know is a lot of people were calling for the market to crash last week. When here, candidly, in our Discord, we were calling for quite the opposite, right? We're not saying that we're going to crash next week. Again, corroborated by our videos that we make here on the channel, right? We were thinking quite the opposite of those moves here, and that's why we're still here standing to this day, right? A lot of people, and I respect that, don't just put 5 minutes into the videos. You have to chart things yourself. Going over here without going further on kind of just spills are, you know, again, we had our inverse head and shoulders. We obviously had our bull flag here. We had our liquidity, you know, and then we're up here. So here's your levels for the NASDAQ next week here. Coming back over here to the SPX here, really like the chart SPY over SPX here. There are actual gaps here in SPX that don't really make sense. The reason why it's the future, and right, you have it close after hours. One of the tricks I like to tell people to do, right, is you can't just use one chart, one time frame. You really have to be cycling through different charts. I trade a lot of candlestick chart patterns. People don't believe it works, but then again, I like to show them one of my favorite videos here. Why did this work here again, right? Why does these work, right? Why do these things work here? So again, it's just when somebody's telling you like don't listen to this X, Y, and Z, my standpoint, right, is really you have to make your own determination, right? And if somebody's making these videos again and again and again and again and again, right, and they're right and they're right and they're right, you have to, you have to make your decision. Coming over here to the financial sector here again, absolutely no sector anywhere really, and we can get into it later. I mean, it's showing us right that we're slowing down here, right? We talked about here in one of our last YouTube videos that for the XLF, which is the financials, right? There are sectors for every sector, guys. XLF, XLE, right? XLV, which is healthcare, and nothing is absolutely showing us right that we're pulling back here, that the market's bearish. Okay, we have our IGV sector for software, just completely right, turning up here. And again, a lot of people will say, they missed the move here, but people are forgetting, right? If this is the ETF, right, for the software sector, there's more than just one software sector, right? What is software comprised of, right? It's WDay, right? It's Microsoft, it's Adobe. You could argue it's Palantir. Some people get, they say, oh no, Palantir is the, XO. I'm like, it's not healthcare, guys. There was somebody last week that said it was healthcare. It's not, right? But there's a lot of different sectors inside some of these sectors. And I think the hard part that people are winning is when you just open up your watch list here on TradingView, try to keep it organized, guys. So here's one of my watch lists here. I have many. I have quite a few watch lists here, in progress, retirement checks, my bot scan work. Try to have them grouped up here. Sometimes people will have like 80 different stocks here just kind of outlined here, but it's very hard to follow because you say, hey, and again, notice here, A plus scalp fast day on Friday. Well, look how Nibius did here, right? My bot created this for me, right? And obviously just use my own kind of thoughts and words to put things together. You obviously have your A plus intraday setups here. You have your A plus swings, you have your A plus shorts here. You can go ahead and just copy these charts if you want. But again, my point is you have to start somewhere, and I think that somewhere, right, is just trying to get your things organized here. One sector that I would like to talk about is, you have energy. Energy's picking up here, right? So you have CVX, you have Oxy, you have SLB, VST, Oklo, SMR, which actually, in my opinion, isn't taking off here. We can get into that later. In fact, we can just get into it now. Right, one thing that I was telling people here, right, is that on the last financial earnings here that they had, they only made $70,000 versus I think their estimated was like I think 8.8 million. Somebody can correct me if I'm wrong in the comment section. So just paying attention to these small things here will kind of help you understand. And I'm really redundant. I'm really repetitive here because I don't think what I'm doing needs to change at all. The only thing that needs to change here is just me, right, continually every single day paying attention to what the market's telling us, right, that's happening here, right? If I think, XLV, if I think the NASDAQ is supposed to go up here to all-time highs, right, like I'm calling for next week, and I'm not really calling for it, I'm saying that the case supports it, there's no reason why we should be heading down, right? It just means I have to keep my head on a swivel here, right? I can have my bias, but you have to adapt your bias in real time here. These are very clean levels here. And again, the number one mistake that traders keep making here is, right, before the move or after the move happens, they want to get involved here. So when we call it out right here on YouTube, which I just showed you the corroboration for the statement that I made, that, you had an inverse head and shoulders, everyone wants to get involved up here, right? And the way I view the levels I have marked out here, right, is that what? You have war zones and you have really good pivots here. To me, pivots are like, levels where you literally will go up or down in a market that's already tilted against you. So why would I want to get involved in here, right, when the move already happened down here? Well, you might say, hey man, well, where should we get involved at all? So, again, one of my favorite charts to show you guys is you see really key levels here where you actually go up or down. So what's another key level here? Right here. And you can just see right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, now we have 13, we have 14, and we didn't quite come quite down and tap it. But what's my point here? Okay, you could have gotten involved right here. Okay, and then what's the problem with that? Someone will get involved up here. So war zones to me look like theta and chop, right? So when you see like a lot of back and forth within one zone here, to me that's like theta and chop. Those are days I want to avoid here. We haven't quite made up our mind here. So typically what I'll do right here is like we're kind of in a zone right here, 715, right? I'm like, okay, well, I know that we're going to go down. And again, a free trading tool here in TradingView is go over here to your price range and just see what your expected moves are. So from this level, how far do we have up? Okay, we have 2.19%. And then how far can we go down from this level on average, right? We can go from 2.19% roughly to, looks like we can come all the way back down to 2.34. Okay, not a bad zone here. You can strangle those zones as well. Okay, and right, you don't just use the pivots here by themselves, right? This is just technically speaking here, but we're just using one technical indication here, right? There's more context to this chart. Are we above the 55 daily EMA? Are we below? What kind of chart patterns do we have on the daily time frame, the weekly time frame, the monthly time frame, right? Are we talking about an inverse head and shoulders here? Are we talking about a head and shoulders over here? Okay. And so I think it's these small things, these small details, guys, that I'm very redundant on. I don't really curse that much anymore. I don't think it's really receptive here. I just try to be really, really almost obnoxious with how many times I repeat it here. I think practice makes perfect, and I tell people that, when we're in the stock market here, we got to start treating it like jobs. If the market here for whatever time you work or whatever time zone you're in, right? If the market opens at 8:30, do you think it's appropriate to hop in the market at 9 o'clock? Right? If we want to treat this like a job that's going to help us retire, you have to think about your actual job in life if that's where we're working. Right? So would your job think it's acceptable if you showed up to work 30 minutes every late? If your job is, or if it's school, right, you're trying to be a doctor or whatever else, do you think that whoever you're working for or working towards, I think, is acceptable if you have homework to do but you're not doing the homework? And I think the number one mistake again here that traders are making is the market here, right, like what you see in front of us, this is the test. But people are trying to study for the test in real time with real money instead of studying beforehand. A lot of people are against paper trading, but I always talk about it's always reps before risk. So without me kind of continuing on the education portion of why people are, making mistakes here, let me just get back to the charts and get super technical here. So again, we kind of observe here that the NDFI, right, it's not showing a slowdown here. We're going up here, right? So first off, right, what is the NDFI? One more time. It counts how many the stocks are trading above their 50-day moving average here. So that's great. We're not showing any slowdowns. In fact, again, on the NDFI, we observe that we're lifting off here, going back down here into the SPX here, the S&P 500. We are breaking out here. There were no signs that we're slowing down here. This was the squeeze zone that we identified here. You could argue it's a bullish pennant. You could argue it's a chilling triangle. All we had here, right, in my opinion, was the 3 white soldiers here and a massive breakout here. Again, that was uploaded to YouTube before it happened. We do have the financial sector here that we talked about before. And again, no slowdowns here. They had record-breaking earnings and revenue here as well. So again, your resistance here market 58.41. Okay, we have our support back down here at 56, and then our 55 here, right, which we talk about net selling and net buyers. Right below it, net selling. Above it, net buying. Okay. Going over here to SMR, this is part of the energy sector here again, and just a stock that was giving you an example of before we had that chart pulled up. It was, I believe it was IGV, which is a software sector. And again, we did chart out CRM for you guys last week here in real time on the chart. You can go ahead and check that video. In fact, maybe the chart is still put up here for my levels. And the point of showing you the sectors, right, is a lot of people keep thinking that they're missing the moves here, but there's a lot of different stocks within some of these sectors here. So again, on the daily time frame here, one of the stocks I am looking at to go long on here is the CRM, okay, Salesforce. So we do have that 55 EMA institutional support. Are we out of the woods here yet? It's not enough, right, just to go to the daily time frame, right? I like to show people, go to the weekly time frame. What are you seeing here? Okay, what should we do here? Go ahead and drop, go ahead and drop your fibs here. So typically, right, you go from your swing high, okay, to your swing low. So where do we stop going down and where do we stop going up here? Okay, that's where I got my first level, right? That's not enough here too, right? So this is my broader context here, swing high, swing low. And again, do you notice how these levels work? You notice how, right, when I draw these fibs here, things kind of actually make sense here, right? So look what you're doing here, okay? And look what you're doing here, okay? It's interesting how that works, right? Look here, right? You can start to find and see levels more clearly here. But you'd have to make it into, maybe 10 minutes into my video to understand, like, this is how you draw fibs. And by the way, I do have that video here on my YouTube. If you're curious how to draw fibs here, I go over a full detailed analysis on how to do it. It takes less than 7 minutes to draw them and to get my settings. I show you my exact settings that I use. So for me, right, it's not enough, right, to draw the broad-based fibs here, right? What's happening here in the short term, and again, this is where maybe it gets more subjective, but I think this is what makes me unique here. So, right, it's not enough to do that, right? So from here, here's your top, and from here, also, where's your bottom? Holy crap, I don't want an arrow. Okay. Okay. So I have my 50% line here, and what's the average range here? So let me get a date range. So from here to here, okay, so about 224 days here. So okay, a more relative time frame here for me to kind of go off of. And then again, right, is that enough for me to do? So let me go ahead and just delete my fibs here because I don't need these ones. I drew some lines that I thought were most important for me. And then I want this time frame here from our swing high to our swing low here. Where are we at here? Okay, stick with me here, guys. And again, if you find the videos helpful, just a like, a share, maybe just a comment saying, hey, I watched the first 5 minutes. I mean, just keeps me kind of motivated making these videos. It is a little bit hard sometimes to feel motivated when, I used to get feedback. Oh, why are you complaining? I'm like, because nobody says anything. For if I'm making a video and I have, maybe 5 viewers watch and then nobody says anything, it's like, why am I even making a video to try to help if I don't know if I'm helping? So you kind of leave me a comment letting me know if you're learning something, or if it can go more detailed or in depth into something. Helps me, be interactive. I don't want to just talk to myself. I don't want to talk to the wall. I want to talk to people who are, finding the things that I'm, kind of sharing to be very, very helpful. So here, right, I have 2 levels here that I know I can get involved with here, right? And unfortunately, the hard part is I gotta be disciplined here, right? So it looks like the next level I should get involved with is right here, and this is corroborated by what? Okay, the levels that I had marked out ahead of time. So right, this is part of the process where, like, you have to have your charts here marked out for next week. That way, right, you can be prepared. I don't want to start charting CRM during the market open. I want to have my CRM chart prepared. And then what can you do with your charts prepared? If you know that CRM rate is a good level to get involved with, that 208, go ahead and TradingView, go ahead and click your plus button. You can put an alert here for 209 here, right? That way you can know, hey, I'm not in a war zone here, where we, right? Speaking from a technical perspective, you can just come back down here, create an inverse head and shoulders, right? Double bottom, maybe even crack into a larger bear flag, right? Or right on this time frame, right? You have your left, you have your head. Maybe you come back down here, just tap this line here, 50%. gap back up here, no different from this beautiful chart here over on QQQ, okay? And that's where all these concepts and things that I talk about tie back into each other here. Trying to simplify my charts here, that way you don't have too many squiggly lines in front of your face. We have our stocks right here, pretty clear levels here. You have your 55 EMA institutional support right here. Here's your left, here's your head, here's your right. This is your bull flag here. You're breaking out so far. You have a dragonfly doji on the daily time frame. Again, with your EMA support, you are above your 55 here. So right, we are in the bullish right space. Okay, we have our resistance up here, which we did reject at 562. Okay, this is the ceiling here. So again, these are really, really, really large liquid zones here to get involved with, whether it's for shorts or longs. And again, you know, when it comes time to when we get back up here, you have to kind of put all those factors again, right? From a technical perspective, maybe we get back up here, right? But maybe from a macro perspective, right? Maybe Jensen or Nvidia makes up another deal here for a different stock here, whether it's Nibius or, you know, maybe themselves Nvidia or Micron and so forth, Lamron Research, to why we might just, you know, hey, we're gonna have more chips or this or that, and you're right, then we just start skyrocketing. So it's not enough, right, to say, hey, we have our levels marked out here, right? You really have to pay attention to these macro headlines of what is actually happening here underneath the hood, okay? We already marked here, I think. Oh, I guess I marked it out here beforehand. So your point of control here for CRM is 191. You have your call wall here at 237. Then you have your value area low here at 147 here. Going back over here to Nibius, you have your resistance right here at 278.51. So look at these levels here for shorts. I wouldn't really candidly want to be shorting some of these indexes here. They did leave a gap up here. Not a gap, excuse me. What am I saying? I'm talking crazy. They left us some room up here to come back up here to 298. And these charts will all start to look the same here. So one of my favorite charts I've been showing you guys is, stick with me here, okay? So you have Nibius here, right? You're saying there's no way, right, if you just look at the measured move here, there's no way that, you know, Nibius can just go up at what, another, you know, so it's been up 100% in how long? Basically less than 20 days. Is kind of crazy. So right here, right, they go back up to all-time highs here. People are thinking there's no way that they can happen. That's another 7% here, but they're forgetting, right, first off, we moved up over 100% here on the stock in less than 21 days. And also just on Friday itself, right, we're going up 8% or 9%. And again, the reason why they're coming up here in a nutshell is they had a $9 billion order that allegedly, right, was booked. But these charts, this is where people get wrecked. I'm gonna go ahead and clean up the chart here real quick. Look here, okay? So you're thinking there's no way I can just break these tops here. But again, I'll show you right here in real time, okay? Do you really believe that? Let's go ahead and, right, look at CrowdStrike. So you didn't think it was going to happen, what? Let's see here. You didn't think it was going to happen here, right? Then that happened. Didn't think it was going to happen here. Then this happened. Didn't think it was happening here. Then this happened, right? You'd have a falling through reversal here, which I find interesting. So maybe I'll look for a short here, right? But same thing with Amazon. Amy and Zian. Okay. You didn't think it was going to happen here. But these charts are all looking the same, guys. And don't get caught, please, in this we gotta go down, we gotta go up stuff. You really have to put and tie all these things together here to really have an understanding of what's happening here in the market. Okay. I need some coffee. I'm still waking up here. Here's your zones here for next week here. So I went to the 23-hour time frame, and then I went to the 24-hour market. When you do go to the regular trading hours here, sometimes even the extended, you actually see gaps here that don't exist here, and that's the number one mistake traders make here. So your call walls on SPY are 789, 796, 805 for my full price target extension here. And again, for the people that keep saying it's overextended, right, for me, it's no different from how people didn't believe you could come all the way up here. They're the same people that can't believe why you're not still going up and or why you're coming down. So don't get caught in like the semantics of it all and like we gotta do this, we gotta do that. We don't have to do anything. The market's telling you exactly what's gonna happen on earnings, and earnings are not getting worse, they're getting better. SMCI is just ripping. Nibius, everyone's having great earnings. That's why we're going up here, right? The only reason why we'd be going down here is if the earnings were atrocious. So that's another part that you have to understand here about the market. Things aren't getting worse, they're getting better. Now, we can talk about the economy and some other things here. I mean, are they getting worse? I mean, sure, right? But again, for the market and the stocks themselves here, right? All these growth stocks, right? The energy, right? You see the charts here, nothing's getting worse here. They're just climbing up here. Energy's making more money, financials are making more money, chips are making more money, maybe Nike's not making more money. That's one of my favorite charts, of course. They got really tight sweatpants and booty pants, right? I mean, they're not a growth stock, you know? So right here on SPY, your levels for next week, right? Your resistance obviously is up here at 789, you got 796, 805, and then your walls down here at the bottom, right, are 761, 749, 742 here. So again, right, what do you have here? Bull flag breakout, and you could argue a borderline ascending triangle here. If we just zoom in here to the charts, you can see right here, flag down, you could say 1, 2, 3 down, up, engulfing candle here. Retrace, not quite 50% here, but you are holding support here. So one level that I really don't want to break right here that I'm looking at visually is 771.77. I definitely want to hold this level here to have continuation to the upside, and you could argue you have to. What can happen here though, if I just go ahead and clean off my chart real quick again, right? I'm just going to remove all 17 drawings. So we can just look here. What happens here when you have indecision, a lot of data and other things you can chop. And that's what you had here, right? That's why people were getting panicky and thinking, oh my gosh, it's over. Maybe this isn't a bull run here. But again, look right here, what you have. Morningstar breakout, 3 white soldiers, and the rest was history. Okay. Going back over here to the weekly time frame here in SPY, one of the concepts I like to talk about is we do have a bullish engulfing candle here with borderline a doji. This can turn to a 3 white soldiers. What does the 3 white soldiers look like here? 1, 2, 3, beautiful, right? 1, 2, 3. Okay, that's a beautiful a chart pattern here. Then you kind of see this ascending triangle here. So 1, 2, 3. Then you kind of see these two. They're not dojis here. Just call them bullish engulfing candles. They're not quite here, but just work with me here. So right, you can get this 1, 2, bump, bump. Right, 1, 2. Maybe this is just 1, 2 smaller candles here. Okay, 1, 2, bump, bump. Okay, and again, this is why it's important to expand and look outside just one time frame here. So when I talk about undercuts and retests here, right, what does an undercut and retest look like? So right here, gap up, okay, undercut, okay, retest, break down, or right, break up here, falling 3, down, retest, down, retest, down, down, dragonfly doji, then you finally have your breakout here. So this chart right here alone that I was highlighting here in my YouTube video would have really helped you, right? Because I'm just talking technicals here. I need coffee. I'm really tired here at the moment. But these videos here, I think, can really give you an edge here to how I mark my levels and to what you should be looking for here, okay? If we're going to have our evening star reversal here, what does the evening star reversal look like? I'd look for like a really, really velocous, that's not even a word. I look for a very, very strong move here. So what does a strong move look like for me? So if it took me about, let's say here, it took me from the 27th through August 10th here to kind of go up here. So the 27th, so just call it, and today it's the 16th here, so 16 plus, let's call it like 20 days or whatever. So it took me 20 days to go up here, right? What would be very concerning for me here in the market though, right, where I may change my opinion, if it's just technically speaking, right, without any other macro factors here, is if we get a very large red bearish engulfing candle here, which would complete our evening star here. So if it took us 20 days to go up here, right, and it only took us 5 days to go down, those are things, right, that start to get concerning to where you might start to hear me change my tune here. But what do I know about that, right? From like a technical perspective, I know that your 50% retracement zone is going to be here at 765, 762, and then 759 here, right? And then again, you might undercut, right? So we say flush undercut zone, undercut all the way down here, retest, maybe barcode for a while, like this, barcode again, and gap back up. And what you could do right here again is, right, come back down here, undercut, right, maybe just barcode here, and actually what would this form here? A lot of people don't see this here. What could you form here? Your left, here's your head, and here's your right shoulder, right? So when you flip your chart up down, this is going to blow your minds here. Okay, when you flip your chart up here, right, we talk about head and shoulders here, right, from a technical perspective. Okay, that's bearish, obviously. We would all agree on that. Then you talk about inverses, right? They don't have to be perfect. That's bullish. That's right. So it's just the opposite here, right? So people forget, right, no different from how, like, you talk about your bullish patterns. It's just flipped upside down, the same thing bearishly speaking here. So you're right, you could form a bearish head and shoulders, but you could call it an inverse now because we literally inversed our chart, okay? And actually, maybe, right, maybe then we get our move to the downside, and right, maybe the bears are right and they start celebrating. But I highly doubt that's going to happen here. Earnings just don't imply that or suggest that or even support that at all, okay? Coming back over here to Workday here, they had some news. I'm not going to get involved in a stock like this here, although Prometheus did tell us to play out and take this trade here. We do have stocks like Snow here. Again, this is on the watch list channel here. In the Discord, make sure you're utilizing that. We have SMCI here, right? These are all entries and exits here that were given before the moves happened. And then we have, right, the US 30-year. Still getting a bit concerned here, but I mean, nothing, I guess, that we have to get overly concerned about. But again, what is a 30-year loan here? It's just a loan basically that you make to the government here. So, right, what does it mean? You lend $1,000, they pay you $52 every year for 30 years. You get back $1,000 at the end, and right, what is it? Why does that number actually move? Lots of people want to lend. The government doesn't have to offer much. The number goes down, right? So, right, few people want to lend. It has to offer more to get anyone to say yes, right? So the number goes up. So why does the number go up? Few people want to lend. That's why. Okay, right now, few people want to lend. Nobody wants to get paid back in 30 years with money that's worth less. The price keeps going up. The $1,000 won't buy much by then. So, right, the demand for more interest to take the deal. The demand, excuse me. Going over here to oil, oil, the literally reserves keep getting near record levels, not in a good way here. There's really not much to take from the chart here, but just from a technical perspective, you have 84.61, which is your resistance above. You are below your 55 daily EMA here at 82.40. Did you close on it? Why does the chart say that? 82, that's just a bit here. So you are, I guess, right on your 55 daily EMA from a, which is institutional level. But again, if you watch my previous videos, I don't really think there's much to take away from that. I could say that, right, this is just more of a macro play here. If, you know, the U.S. government says we have a, you know, peace deal again and, you know, no more ships are going to get bombed, right, the stock is going to drop, obviously. But again, right, the same breath, Iran keeps coming out saying that's not true, we're going to keep bombing people, right, then obviously that's where you see the volatility there, okay? So not much to take away from this chart here, but you do want to be paying attention here. And I do think we're getting into very, very critical times within the market of what's really going to happen here. You know, two things can't be true. We can't need chips, right, but also not need oil, because the way they're playing off oil is as if, excuse me, we don't need oil. I wish this video was a bit better. I'm just like kind of like trying to wake up here. Going back to Nibius here, again, with the $9 billion backlog here, when you just look at these candles here, these aren't really candles you want to short here, but again, you do have your retracements here. Where can you retrace to? Remember what we talked about? So, right, go from your top to your bottom here, you can get your levels. Jump it down to smaller time frames here to see like maybe where really good zones are to get involved with here. But again, you have to ask yourself, is this something you even want to short or go long on? You know, if you miss the move, just get out of the way. There's always a different stock you can get into. Going over going over here into the XLV sector here, which is healthcare. Again, I'm just going to clean out these charts here. There's no point of reading notes. I'm just trying to show you guys. Nothing is showing us that we're bearish at all. In fact, it's just continuing to make the case for bullish, bulls every single day here. Absolutely nothing is slowing down here. The only thing that you're going to see on the market is you're going to have winners and losers. Is it going to be United Healthcare, right, and within the healthcare sector? Is it going to be Humana? Is it going to be Merck, right? Is it going to be like, right? So those are the questions to ask yourself. Why is this company in this sector going up and this sector going down here, right? Okay. So again, 55 EMA institutional support, and notice how again you keep breaking these highs here, right? So going back even to Nibius, right? But I keep saying don't short these stocks here, right? Not financial wise, right? It's because people keep thinking, right, that it has to go down just because it has a double top here. Yeah, you might retrace down here for a little bit, grab some liquidity, trick people out here, but all you're doing right here, just from a technical perspective, is left, head, right, a breakout. Okay. Okay. Here's some more stocks here. I'm kind of getting out of breath. I'm just tired, so I'm probably gonna end the video here. But I really hope that you guys do find this helpful. I'm gonna continue, guys, on every single video to show you, you know, and these charts will be posted here in my Discord. Just try to step it up a little bit, right? You gotta watch more than 5 minutes on a video. You can't be listening to 18 different creators because you're gonna get 18 different opinions. One creator might say we're going down, right? And maybe he's right. And one creator might say we're going up, and maybe he's right. And maybe both of them are saying the same thing, and they're both wrong, right? But I think when you have 18 different opinions from 18 different people, think about it seriously as it's like you're sleeping with multiple people, right? You're gonna get different results. Somebody might be fun one day, and somebody might be boring, right? But if you can't make a commitment to somebody, right, then you're really never gonna know their true potential. And that's how I view the market and people that you're getting advice, you know, and kind of opinions from rather than advice. Because nothing I say here is obviously financial advice. It's just my opinion here. But But right, really try to look at someone's track record, right? Are they, you know, and big doesn't necessarily mean they have a good track record. There's a lot of people that are so big, right, that they can just say, buy, I don't know, pyramid stocks. I don't know. Then right, the stock is just going to go up because you have such a large order flow here. But again, I'm trying to give you guys a chance here to, really kind of redeem yourself, because there's a lot of people, right, that just don't know what's happening here in the market. But, by me maybe being repetitive, maybe that's going to create some consistency and really good habits within you. So, as I always say at the end of the videos, I hope that you guys are successful here, whether you choose me or somebody else here. But, if whoever you choose, guys, really try to just give them a chance here. This is a very difficult and really volatile market. I don't think it's hard right now, but I think the moves are kind of like what's making it hard, if that makes sense. So I would just encourage you to really give whatever creator you are listening to a chance here, to really kind of expand the way you think about the market, and maybe that's going to make you successful. Okay, take care, guys. Peace out. Holla point.